Welcome to The Winning Trade. Each episode in this series will demonstrate how to make money in the stock market, whether the prices are going up, down, or sideways, using high probability, profitable strategies that were designed to take advantage of the volatility of the Russell 2000 and the S&P 500 indexes. Many of these strategies were designed to work together to maximize profits by flowing with the ever-changing market conditions. Follow along as we uncover the secrets of this episode's winning trade. Hello everyone, my name is John Locke and I'd like to welcome you to The Winning Trade. But first, the required disclaimer material. This presentation is for educational purposes only. We are not broker-dealers or financial advisors. We're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial and make sure you are aware of all your risks prior to placing any trades. Also note that we may be using hypothetical computer simulated trades and or results. If we do, they're believed to be as accurately represented as possible, but keep in mind that live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance and wealth coach with Locking Your Success LLC, and I'm here to guide you into the realm of high probability trading. Now, in a moment, we're going to go over the winning trade, but before we do, let me quickly explain what we mean by an income or high probability trading strategy. An income strategy is where we put ourselves in a position to generate profits through the passage of time rather than depending solely on price movement to go in our direction. Meaning we can often make money whether the price goes up, down, or sideways. Now this doesn't mean we're going to win all the time, but it does mean that the probabilities of us winning are much higher than they would be otherwise. Now if you find yourself needing more information when you're following along, that's fantastic. It means you're learning, and to help with any information you may be missing, simply contact us at lockingyoursuccess.com. or ask a question in the comments of this video below, and we can direct you to where you can find more information. All right, let's move on. The winning trade we're looking at today is called an M3.4u. This is one of our many broken wing butterfly style strategies that we trade on the Russell regularly. And it's my favorite strategy, especially in the current market environment. It's a fairly simple income strategy that's easy to manage and can be traded with as little as $2,500 per trade. The strategy is entered 56 days to expiration. It has an exit loss trigger of $250 per butterfly, which would be 10% of our $2,500 planned capital. However, historically, the average loss when it does lose would be around 4% of planned capital. And as far as a win rate, it historically has won about approximately 80% of the time. The position does not have a profit target, but the average win historically runs about 8% of our planned capital, with sometimes larger monthly wins being as high as the 25% range on planned capital. So let's take a look at the trade. Okay, this is our analytical software. Today is 56 days to expiration. That's when we're going to enter. This position is a broken wing butterfly style trade. We're going to be trading this as a 10 lot, which means we have a planned capital or a maximum capital in the trade of $25,000. A profit target, we don't have a profit target on the strategy. We have a maximum loss of $2,500. So here we're going to come in the market about 17 to 27 points under the asset price. We're at 15.12. That puts us at 14.90. Generally, we're going to do a 60-point wing to the downside and a 40-point wing to the upside. Because this is a day that the market's been down a lot and the volatility is relatively high, we have to widen the upper wing. So what we're going to do is we're going to be by 5 15.30s, by 5 15.40s, and that gives us 5 40-point wings, 5 50-point wings, and that results in a delta of 2.79. So the delta range within this trade is on this size would be minus 15 would be our maximum negative delta, plus 20 would be our maximum positive delta. There are some exceptions in the rules when we do exceed those numbers, but that's generally what we're going to run. And let's run through the trade. We'll see what happens. So here we are looking at our analytical graph. I'll widen this out a little bit so that you can see it a little better. And we're off to the races. So I'm just going to skip ahead to the next adjustment. It's Friday, March 22nd, which is the adjustment, which was the entry date. If we go to the first time it needs to be adjusted, what happened here is the market went up and we ended up with a delta of minus 19. Now that minus 15 number is only valid as long as the asset price is underneath the upper long strike. If it goes over that, we actually have a delta limit of 0 to the upside. In other words, we want to be positive delta. But here we're running about 19, minus 19 delta. That's too high. So we're going to make an adjustment here by simply moving the upper long strikes, move in this case half of them down, and that brings us to positive 1.7, which is within range, so that's good, and we make that adjustment. So now we're here, we're up about $300, and we're sitting just outside the tent. If we go to the next adjustment, that would be the very next day. What happens here is the market goes up a little bit more, we run negative delta again, and since we're above the upper long strike, pretty much anytime we're negative delta, we're going to be making an up adjustment. So normally we're going to start here with rolling 5 of our 1530s to 1520, but if you see when we do that, that brings us to a capital level of near $25,000. We don't want to really even get close to that capital level. So that being the case, what we're going to do to bring that down is we're going to roll these up. And we're going to take a look at all 10 of them. If I do all 10 of them, that actually brings me negative delta. So what I'm going to do instead of doing just 5 of these, we're going to look at doing 10 of them. And if we do that, that gives us a positive 18 delta. Now this is allowed positive 20 delta within the trading strategy, so that's okay. So instead of doing a vertical this time, we're actually going to come in here and sell this condor. And I'm going to take the trade off. You can see how that moves, and this is our resulting position. We're currently at a positive 18 delta. We're $260 in the green. If we move ahead to the next adjustment, there's no adjustment till April 10th. So that was March, let me go backwards in here. That was March 29th, April 10th. We're in this about 11 days. And what happens is the market's essentially been up. If we look at our price chart, we've had a pretty constant climb except for a little bit of a down day here on the 9th. But by the 10th here, we're running negative delta again. Since we like this trade to be positive delta outside the tent, what we're going to do is, actually outside the long strike, what we're going to do here is check this move, see what that gives us. That gives us positive 12 delta, gives us a capital level that is maybe a little bit higher than I'd like. Generally, I like to keep this around 22.5. We're getting close to 24,000. So generally what we're going to do in this case is try to bring this up. We'll see what our delta is. So if I do this, I get a fairly flat delta, slightly positive. So that's pretty much what we're looking for here. So let's do that. Take this off. And that is the position. After our adjustment, we're sitting at slightly positive delta, up about $1,130. So that's April 10th. If we move to our next adjustment, that's April 15th. The position here, again, we've gone negative delta. We can fix this by taking a look at doing a vertical here. If we do that, that keeps us, we're still under like $20,000, so that's looking good. We're running about positive 12 delta, that's looking good. So we make that adjustment. So April 15th, let's see when our next adjustment is. No adjustments until May 10th. So here we are, and if we look at the price chart, what happened is the market kind of ran sideways for a while. And now it's starting to come down a little bit. We had a capitulation and a bounce. And we ended up being negative 9 delta here. So we are due for an adjustment. And for an adjustment, we basically just took a look at rolling down the upper long. And that brings us to positive 3 delta, which is pretty neutral, which is what we like to see. We're at about 22.5. That's about the maximum amount of capital that we'd want to have in the trade, $23,000. But this is okay, especially if it puts us at a nice flat delta. So let's see that. Here's what we look like here. Now, unfortunately, when we go to the next day, we had a very, very large down move the next day. One of the biggest down moves that we've had in the Russell 2000. So I'm just going to hit ignore trades for now. We'll go to the next day, and you notice we're down 50 points by 3:30 in the afternoon. We've lost some of our profits. We're down to about $1,100 profit, and we're way too positive delta. We're only allowed plus 20 here, right? So we need to do something about that. So what we do if we back out of this adjustment here, and that brings us down to positive 18, so that's okay. So let's let that happen. And this is our new position here. If we go to the following day, we actually had a pretty good bounce off of the following day. So this is what it looked like. We had a 20-point up move, and we had a fairly significant volatility shift that put us more than a minus 15 delta. We're minus 40, so we're way more than minus 15. Therefore, we're due for an up adjustment. And for an up adjustment, we did a complete condor here. We did minus 10, plus 10. And that puts us over $25,000, well over $25,000. So we need to make a correction for that by rolling this up. And that gives us a position here that is positive 8 delta, which is fine. And notice we're only 3 days to expiration here. So let's do that. I'm going to clear these trades. I am going to hit ignore trades. You can see the move is done here. This is our new position. And then the following day, let's see, the market was up a little bit. And then the following day, I'm going to ignore the trades. This is essentially, we would let it expire. We have over 60 points to the downside before we have too much of a problem. I mean, you could either exit it or expire it for a profit of around $1,300 to $1,400 here. And that is an example of the M3.4u strategy, a very dynamic trading strategy. It is my favorite strategy at this current time, especially for this environment. And now you know what it is. So if you like what you see here, I encourage you to join us and discover how you can follow along with this and other great strategies as they unfold during our weekly market update webinars. If you have any questions or comments or anything you'd like to see on the next winning trade, we'd love to hear from you. Simply comment on this video below so you can get those questions answered. And I thank you, and we'll see you on the next winning trade.